That it's not being imposed on the United States from the outside like it was for Greece or Spain or Portugal or Ireland. This is our own, this is really, even though we think of it as a fiscal problem, it's really a political problem. The Mr. Market, as it were, is not forcing the U.S. to correct its deficit. We still have, for all practical purposes, record low interest rates. And so it's not like there's a capital strike against the U.S. And so I've thought all along that most likely we'd have to go over the cliff. Because it's easier to solve it after the fact than before the fact. Because imagine what's going to happen. People who don't want to raise taxes are not going to raise taxes. The system's going to raise taxes, and they're going to be able to come along and rescue us and cut our taxes after we go over the cliff to bring us back. So I think that most people expect some fiscal tightening next year, but not the full kit and caboodle of the fiscal cliff.
Well, that kind of gets into what you think will happen. So it's sounding like you think we're going to go off
for a short period of time, and then they'll have some compromise, something that some of the critics would say is going to kick the can down the road. There's not going to be enough spending cuts for some people, not enough revenue increases for other people. And so we're still going to be stuck with a debt to GDP ratio that's relatively high, above 90%. We're still going to be looking at a deficit for next year close to $1 trillion. And so I think that the market is looking beyond that. They're looking, the big issue, I think, is how much of a slowdown do we get next year because of this fiscal cliff, because of the tightening of policy, that is from tax increases and spending cuts. How much of a drag on the economy? And it's important because when you look at around the world, this is really what we have a shortage of right now. It looks like there's too much of a lot of things, too little what we'd call aggregate demand. Countries like the United States are growing, but very slowly. Europe is contracting, Japan is contracting, China has slowed down, the UK has been basically stagnant for a year. And so the key issue is, where is aggregate demand going to come from? And this is the world's largest economy. And if we don't provide the aggregate demand, it doesn't look like it's going to be coming from anyplace else.